Hey guys, how are you? We're gonna add another concept to the repertoire. So today what we're gonna be talking about is change in state of delivery. Of course, as you may know, there's also market structure shift, but today and what I use is change in state of delivery. So we're basically gonna be mainly focusing on that. Of course, I'll go over the market structure shift and what that is, because you can use that too. It's basically the same thing. It's just sometimes if you want a better entry, you use the change in state, and sometimes if you want a safer trade, you wait for the market structure shift because it's closer to the draw, and then you just wait for the pullback. But sorry for confusing you guys about that. I got a little carried away there, but let's get right into it. So it's basically just like high here, break to the upside, market structure shifts. So it's a bullish change. We get bearish price action, bullish change. So if you want to wait for this and then you start looking for buys, that's what the market structure shift is. Of course, you don't want to be on a higher time frame like this one. Definitely want to go down to a lower time frame, for example. If you do like swing trading, the 4 hour and the 4 hour is cool. The hourly is cool as well for market structure shifts. But if you're a day trader, definitely look at the 50-minute and the 5 minute for the higher probability ones. If you want to get good entries, the 1 minute is cool as well. So for example, here, as you can see, we had the high taken with this push. So wait for it to go below that. And well, there's actually no retracement. And you could expect that because it's in the 4 p.m. hours, so there's usually just a massive push towards some sort of liquidity. And well, it's also Friday, so yeah, we ended up taking out this, pushing into the rest of this, and yeah. But for here, as you can see, market structure shift was liquidity swept. So keep going down right there, boom, market structure shift. Wait for some sort of pullback, pull back into this, boom, go short, target lows, boom, done. So that's what that is, a market structure shift. I don't really want to go too much into it since I'm going to be mainly focusing on change in state, since you could also get better entries. Now, what is a change in state delivery? It's basically a shift from sell side delivery to buy side, or from buy side to sell side. So what confirms that shift is, for example, here, you want to see some sort of sell side taken for a bullish scenario. Sell side right here, swept, boom. We've already covered that, so you guys should know by now what sell side is and buy side. So sell side, buy side, boom, swept here. Okay, so sell side was taken here. Okay, that's one thing for our setup. Now my setup also consists of a change in state. So the change in state is the two down close candles in this case that take out this low. So we have these candles here. These are the two down close candles, right? Okay, let's take the highest body because it's a bullish run. I'm bullish now since we took out the lows, and I want to target these imbalances. So let's take the highest close right there. And this is the same for every scenario, guys. It might not be 2 candles. It could be like 3 or 4 or 5. It could be like 6 or 7 too. But like on the 1 minute, usually it's 3 to 5. Sometimes it's 2 like this. But it doesn't really matter. Just whatever it is. For example, like this for a bearish one would be, yeah, for here the change in state. There's no real. You would look for the market structure shift. So the change in state would be all the way over here. So yeah, you wouldn't really do that. You would wait for the market structure shift, which is what I would do, because I'm not waiting for market to come all the way over here, retrace into here. It's just improbable. We're most likely just gonna trade for here, and once we trade to this low, I am no longer willing to go short into these lows, right? I'm taking high probability trades, guys. I'm not like waiting for this to come, get taken out, and then retrace all the way back up past 50%, right, guys? Past 50%. Well, it's in the 50% mark, but the fact that I want to see this use this I want to see the market use these lows as fire and propulsion to then get down to this. I don't want to see us retrace off of it. You know what I'm saying? I want to see pressure, so I'm okay to see a price get away from me. There is what I'm saying. And also I would yeah, so on in this scenario I would definitely use this as a market structure shift. And yeah, the market got away from us, guys, so that happens sometimes. But yeah, we're just managing risk, guys. That's all it is. So as you can see, change in state, really nothing here on the 1 minute. I mean, you could enter right here if you want, right there from the fair value gap, which I will teach in the next video, so definitely stay in tune for that. Sorry for the voice crack, god damn, that's crazy. All right, fuck, yeah, you could target this, didn't get met, but this is there as well. So TP1 here, 2, 3, and what is this? It's not even the open yet, so you wouldn't even take this. If you're new, 100% you're not taking this. If you're somewhat competent in trading, you would definitely look to trade this, whether it's in or out of session, whatever it is. Since you've been doing it for a while, it's valid. Then you could. But if you're new, I would definitely stick to the sessions. So for another example, let's go to a higher time frame. Let's go to the 5 minute. I usually don't wait for the 5 minute unless the 1 minute is so like tight, for example, like so like close, and it's just like the market can easily just hit the change in state and then reverse back up or something for a bearish example. If I'm looking to go short, I would then in that case I would wait for a 5 minutes. So let me find an example of that. And here, this is another example of like I wouldn't even like this change in state. Like I'm sure sell side was taken here, right? And the change in state would be up here. Like the risk on this is like pretty crazy, right? Change in state, boom. I'm waiting at least like not even the price doesn't even come close to 50% of this range. It's like the risk on that is just insane, but I would definitely let that go. So yeah, let's see here on the 1 minute if I could find a time where the change in state is so close to the low level that was taken. It just isn't worth it. So I wouldn't consider this a change in state right here because there was no highs taken, right? So okay, here for example, lows taken, internal lows taken, boom, swept. I wouldn't really look at this as a change in state. Which one is it? Boom. That. Because it's so close, it's like so like unprobables and low probability, so I definitely just want to wait for the higher time frame confirmation. And now I'm gonna struggle to find this. I think it's this. Yep. So there we go. Higher time frame. Boom. Go back to the lower time frame. So we hit the change in state on the higher time frame. Now I wait. We didn't hit it there, guys. So I won't be entering in. Oh, there's no fair value gaps anyways. But let's say there was a fair value gap like here. I would not be entering in this at all, and stops under here regardless. But yeah, so change in state, I'd wait for a retracement. No fair value gap. Where's the fair value gap? Right there. There we go. So let's mark this out. There we go. Boom. Entered. Runs. Let's find one more example of this. Let's find a clear example of this. Super clean. Like, see, change in state, but like it takes so long. Like I already took out these highs. It's just not something that I would look to take. Yeah, see, this would be another 5 minute example. This is a AM session, so if you're trading London, you might look to take this trade since it's in the macro times. So this would be the macro times. and it's still somewhat in it. So if you're somewhat competent, like you could trade outside. So yeah, I would not use this as a change in state right there. So this is the down close candle that took out the lows, not this. It's this, because there's a green candle in the middle. If this was a black candle, which is down close, then it would be up here. But since it's a green candle, it's up closed. This is it. That swept the lows. This is the last black candle. So this is the change in state, which is a confirmation. Did I mention that after we get the sweep, right? Once we get the change in state, it's just like an extra confirmation that we're going to head in the opposite direction towards the liquidity that we want to target, right? That's basically, or like not even just liquidity, it's also like to fill orders in imbalances like this, like also highs too. Like it's multiple little things like that, and also like certain gaps that I have planned out to teach you guys further in this series. It's also to target those and other little gadgets that I've concepts, I guess you could say, that I've planned for you guys to learn. Yeah, so I wouldn't really use this since it's so like close. We don't even have a fair value up there, but regardless, we wouldn't use this. Let me just set back here so we don't lose this spot. Go on the 5 minute. Perfect. Swept right there. Cut and clear right there. Boom. Swept right there. And also on a higher time frame, I bet you we swept something too. We'll swept this. Boom right there. Change in state. After we get the change in state on this candle closes on the 5 minute. This candle opens. Come down. And well, let's see if there's a fair value up there. So right here, boom, fair value up. This should be green because it's a bullish one. Boom, right down into it. Bullish trend to the upside. So yeah, we hit it there, went down, start targeting highs and unfilled gaps. So yeah, that's pretty much it for that. Just another concept added to the strategy. We have just like a little review, a little refresher. We have the liquidity sweeps, internal, external. I know I didn't cover that, but this is just a little extra. Internal is like already in the leg, and this is clearly another leg. So 1 leg, 2 legs. That's what I'm saying. So sweep of liquidity, change in state. That's what we have so far, guys. I already taught you trends, what times to trade. We're gonna be adding a retracement entry price to get into, which is the fair value gap. Now we have multiple fair value gaps. We have the inversion, which is right here. And we have the CISD, which is right here. And I'm going to go over this in the next video. This is just a little teaser, I guess, towards the fair value gap. There's a lot more to it than this as well. There's certain times when the certain fair value gaps hold better. There's certain times when certain fair value gaps form that can act as magnets. So yeah, guys, it's just a retracement tool, but it's to get a better price and then to get that shot down into opposing subsets, right? So that's pretty much it for change in state of delivery. If you guys have any questions, if you think I missed anything, if I should touch up on anything about the change in state of delivery, then comment below. That'll be it for this one. I'll see you guys in the next one.